Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Dr. Anas Alhajji and Ira Harris. Dr. Alhajji is a world-renowned energy markets expert, researcher, author, speaker with more than 900 papers, articles, columns to his credit. He advises governments, companies, financial institutions, and investors on various energy market issues, focuses on oil and gas market outlook, energy geopolitics, energy security, and the impact of disruptive technologies on the supply and demand of energy. He's managing partner at Energy Outlook Advisors, LLC. Ira is an independent trader, hedge fund manager, global macro consultant, trading foreign currencies, equities, bonds, and commodities for over 40 years. He was also CME director from 1997 to 2003, and also a stint most recently. Welcome, gentlemen.
Thank you. Good morning to everyone.
Thank you. And this is indeed another great honor and pleasure. It's only through your auspices that I get to actually sit and talk with such an esteemed and knowledgeable person about energy markets. So this is, again, always a great pleasure.
Great. I thought we begin with your view, Dr. Alhajji, on your macro view of the global economy, in particular the energy and oil markets and overall geopolitical risks thereof.
As you all know, I think this is a very important question in several ways. The Russian invasion of Ukraine, as you know, changed the landscape of the energy markets, probably permanently. We don't know. But it did change the landscape for energy markets. The problem is the change in landscape in energy markets is also influenced by the macro environment worldwide, whether we are going to have a recession or not, whether we have slow economic growth in China or not, what's going to happen, etc. All of this is muddied by other issues related to energy markets themselves. To give you a couple of examples, in this case, for China, for example, even they had lockdowns, although we have slow economic growth in China, but because they were filling up the strategic petroleum reserves and filling up their inventories, oil demand continue, and it did not reflect the economic situation in China. So that kind of muddies the water. The other issue related to energy markets is the substitution among energy sources in a way that we never seen in history before. Because of the increase in demand for LNG and in Europe to replace the Russian gas, and because of the competition for LNG between Asia and Europe, as you all know, LNG prices went through the roof, and we had we broke record after record after record in terms of prices. This massive increase in LNG led to substitution. So countries and companies start switching back to coal, they start switching back to oil, etc., etc. So this switching muddies the water too. So we have change in international trade in energy, and then we have the substitution that affected this. Add to that the impact of drought, that kind of changing the direction of trade one more time. So even within the energy market themselves, we have all those changes, and the picture right now as a whole is very difficult to find a trend to figure out what's going to happen in the short run.
Interesting. And your thoughts, Ira?
Oh, I mean, those are all the hot button issues, as I would expect nothing else. And then I'm going to, I hope we'll get to talk about in that big concept and that wide array of events that are going on, the impact of an appreciating dollar at this time and how it's affecting even more of all of those things that Dr. Nass talks about, in that we have to look at that because that is creating more stress upon the world. And And then what's going on, of course, with the U.S. and I'd like to hear his views on the Strategic Petroleum Reserve and what's going on with the siphoning off of LNG from what has typically been an Asian destination, because I think the Asians, meaning a whole litany of countries, provided the financing for building the infrastructure for U.S. LNG down in the Sabine Pass, and yet now a lot of that is now headed towards Europe. So I guess we'll have to talk more now. But from my historical analysis and the way that I view things, the role of the dollar is very important in this entire thing, both on a supply and demand side, by the way. So
you are absolutely correct, Ira. The appreciating dollar basically affects supply and demand of energy sources, especially that oil is priced in US dollar. OPEC still uses the dollar in the pricing of oil, and that muddied the picture even farther. And you added also the SPR. That's another factor here. And the issue with the SPR is the amount that's been released is unprecedented. And therefore, the impact was not seen by most analysts. They always thought it's the same old story, same old story. No, this is not the same old story. The impact of this release is huge. And the first impact of the SPR is that it prevented oil prices from going above $140. So when the prices did not decline in the beginning, people said, well, look, SPR is not effective. Well, it was effective in preventing prices from going up. And as the Biden administration added more and more oil from the SPR, we've seen a reduction in prices. Then the refining issues being solved and gasoline prices went down. But the SPR continued to decline until we reach a level where we've seen substitution between commercial inventories and the SPR.
Yeah, I think that's right. But we knew that after November 21's elections in the United States, when the Democrats really took a pretty good drubbing in many ways, that then, of course, immediately the Biden administration went to open up to siphon off oil from the SPR, because their pollsters told them that the elections went badly because of headline inflation. So the attack became headline inflation, and of course, we had all the what I call crap media running to the gas stations and taking pictures at the pump, with today it's 480. It almost looks like a McDonald's sign. It's 480. It's 485. It's 5. So they've attacked that, but of course, it has certainly impacted gasoline prices, and as you rightly say, kept them from necessarily rising to another level, but it hasn't done anything to really prevent the rise of headline inflation. So they're still stuck in that, but except that the SPR is now draining away quickly, and they're already making deals with the large exploration companies and producers to refill the SPR, I guess, if it gets down below $80. We haven't heard much about that yet, but we'll hear more. So thank you.
Yeah, I think the second part of it is just kind of probably rumors and news. I don't think there is, or let me rephrase that. There is no reason for the government to refill the SPR now, especially at current prices. There are a few facts here. The first fact is, yes, they sold the SPR at $110 and $120, which is a very good price. But if you look at the real prices and the cost of the SPR, every barrel of the SPR was sold at loss. If you look at it from a financial point of view or from an accounting point of view, every single barrel being sold at loss. But once you look at the economic and political impact that is not related to the accounting, they are huge. And therefore, if you want to look at the total package of benefits of releasing the SPR, in a sense, the benefits from it were huge. But from pure accounting point of view, it's being sold at a loss.
And in terms of the prices, do you see prices being influenced by central bank monetary policy, hawkish policy, to reduce commodity prices in general? Do you see effects of that?
Generally speaking, when we look at oil prices and we look at supply and demand, any impact coming from central banks and government policies coming from the demand side. The problem is, in academic studies, we can sort it out. The issue here is, on one side, you have the central banks raising interest rate, which is supposed to pressure oil prices in a sense because it reduces demand. But on the other side, you have government subsidies because of high fuel prices, because of high food prices. We've seen subsidies throughout Europe and other places around the world. So that is countering the impact of central bank policies. On the other side, we have the recovery out of COVID, which is also countering the impact of rising interest rates. So we have kind of mixed policies here, and we don't know yet the net impact on the economy. It would take us probably 2-3 quarters to find out.
Your thoughts, Ira?
I think that's absolutely right. We got so many variables that are moving now, but I'd be remiss not to ask this question, because this one boggles my mind. What is this oil price cap that, of course, was put forward first by Janet Yellen and then presented to the G7? I try to wrap my head around it, and I just cannot get there. Am I missing something?
No, you are not missing anything. Basically, everyone is confused and everyone is laughing. The issue here is as simple as this. Governments, whether communist governments or capitalistic governments, practiced price controls on energy over the decades. And as you recall, both of us have white hair, so we remember this. In the 70s, we had the price controls in the US. The government of the United States controlled energy prices just like any other communist country. And they succeed to a certain extent within the country in achieving certain goals when they do price controls, simply because they have the law on their side, they have the court system on their side, they have the police, and they have all other things that they can enforce those price controls. They have inspectors with legal powers, they can enforce that. Right now, they are doing something that is really laughable. They are telling the Russians and the Indians, okay, you Russians cannot sell your oil more than this price to the Indians, and you Indians cannot pay the Russians more than this price. They have no legal authority. They don't have the police or the army, and they don't have the Congress. They don't have anything to enforce it. So if you look at what Janet Yellen basically and the Treasury Department issued about over a week ago, it's really laughable, because they are expecting, literally, as you know, in the oil trade, we have all kinds of people. We have the sellers, and we have the buyers, and we have the shippers, and we have the insurers, and we have the banks, and we have the companies that service the ships. We have the ports and port managers, and we have purchasing managers, all kinds of things. And the Treasury Department seriously think that everyone is going to snitch on everyone. And that's the only way it works. That's what they think. And they just forgot that we are seeing people being thrown out of windows in hospitals and hotels and other places, because the mafia operate differently from what government officials in a democratic country do.
Yeah, thank you.
The other issue related to the price control is, and this is kind of what's funny, well, Putin does not want to sell to Europe anyway. So he's selling to India and China and other places. And the US said, well, okay, we are not going to import anything from Russia. Europe is not going to import anything from Russia after December, or a certain date in December. And therefore, the price control is going to be applied to everyone else, like India and China. But India and China are already have their own price cap by getting a discount of $35.
Yeah.
So if they choose a price cap that is at 65 or 70, Well, that's what the Indians and the Chinese are doing. What that means is they are literally legalizing what India and China are doing. But now we have a problem, because India and China, all the shippers and everyone else, supposed to work diligently to provide paperwork to the G7 to show that they are legal. Why China has to submit papers to the US government?
Yeah, it's a good question. And you know, the United States, if the shoe flipped and the United States could buy oil at a discount to help and benefit their citizens, wouldn't they do it? You'd have to be out of your mind not to do it. If somebody's offering you a discount on something that you absolutely need and can actually store it on top of it, why wouldn't you do that? I'm looking at a chart in front of me right now, and it's the price of crude oil, WTI crude oil. And the 200-month moving average is $63. So I know that oil right today is $84, WTI oil. Brent is probably 90, but you're looking at it and we're still hovering over a long-term price average. So the Russians are still way ahead of the game from where they were if I take any type of stochastic reading. So you're not, you can put all the pressure on, but India and China, Japan, probably Iran, from what I understand, that Iran is willing to buy Russian oil discounted and sell their own oil. So they're arbitraging the hell out of the market. And if they're going to refine it anyway, the Russian oil is pretty good oil. It's not Venezuelan type oil. So if you have any type of really quality refining capabilities, it's okay. Thank you, because you're clarifying it.
Let me tell you two stories about price control that answer your question that you started the segment with, the last one. The first one is when the United States government imposed a price control in the United States after the embargo, the oil embargo of 1973, they got stuck with a serious problem. And the problem was we have oil that's been drilled for early, and they benefited from higher prices, and the government thought they don't deserve the increase in prices, and therefore they imposed a price of $3 a barrel on the old oil. And we have new oil that's been drilled now with the new cost, and they have a different price for it. At the same time, we have states that import oil at the world price, which was about $12. So they come up with the entitlement program for refiners, where refiners who import oil at $12, they get a subsidy from the domestic guys who sell their oil at $3, and the average price was about $7 something. So the guy who is selling who is importing the oil will get a subsidy from the domestic producers. And the irony here is this: a lot of people, because of the panic, stored oil, and they stored oil at $3. But since it is still old oil, it's still at $3 no matter what, although they have storage cost. Well, a few months later, they realized that there is no crisis. And if there was a crisis, it ended, and they have a lot of oil in store, so they want to sell it. But they found out that they will lose money if they sell it, because they have to sell it at the price they paid for. But they already paid for storage. So they asked the Congress to modify the law, and the Congress modified the law and said, you can sell the old oil that is stored at a price with a profit up to 50 cents, period. And that created what we call the Louisiana daisy chain. Immediately, several lawyers realized the game. They put ads in newspapers. They hired people who, with no experience, they brought into a big room, and they made everyone a CEO of a company with all the paperwork is ready. They have 25 CEOs in a room with no experience, nothing. And then they start passing the contract and say, sign, 50 cents, 50 cents, 50 cents. And the price went up in that room from $3. By that time, prices were about 14. Once the price became 14, they sold the old oil at $14. So the government went crazy and they sued everyone. And by the end of 1976, The government lost every single lawsuit at a cost of $2 billion in 1976 dollars. $2 billion on those lawsuits because they lost every single one of them. And why? Because every time it went to a judge, the judge looked at it and said, well, the law said you can sell it for up to 50 cents, period. You did not say once. Just because they did not have the word once, basically, we ended up with this problem. So the American consumer did not even benefit from the lower price in this case. So we are talking about price control here. So this is one. The other one is the refiners on the East Coast were importing the oil at $12, while the domestic oil was at $3. And a ship coming from Kuwait or from Iraq will come and deliver the oil at $12. Now the ship will go back, but they need fuel for the ship. And guess they will get it at which price? They will get it at the $7 price. They just sold it for 12 and they just got it for 7. And the US subsidized the global shipping industry. The taxpayer subsidized the shipping industry around the world, especially the Greek one, for several years. And that's why the joke about Onassis, since he owned the largest fleet at that time, that he got the money and he got the girl. You know what I mean?
That's true. He did pretty good for himself.
The petrodollar system, what are your thoughts on that, like initially set up with Saudi Arabia?
Okay. Whatever that news about Saudi Arabia, that was a rumor. It wasn't true for a simple reason, because the Saudi riyal is back to the dollar and they are not going to shoot themselves in the foot, period. So that news was a rumor. It wasn't true. But the fact is this. Oil has been priced in dollar. It's still being priced in dollar, and it will remain priced in dollar. And the reason why, because for any currency, for any pricing system for oil, we need 3 conditions. And those 3 conditions are, we need liquidity. Historically, we did not have any currency that can match the dollar. I mean, think about the 70s and 80s and 90s. The euro is something new. We did not have enough liquidity. The other one is we need relatively stable currency. And that fits with the dollar relative to all other currencies and the fluctuations and the volatility of others. As you know, several currencies collapsed in the last 50 years. And the third one is it has to be widely accepted worldwide. And that fits the dollar. I mean, for God's sake, even drug dealers deal with dollars. So we need this, and that fits with the dollar regardless. The other issues when we talk about the dollar is you are talking only with one government, one central bank, one entity, and that's it. When you look at the euro, we are talking about 28, 29 countries. Yes, we have one central bank, but when we had Brexit, we've seen the crisis there. And if one country gets mad or they make one statement, then you see the volatility in the euro. So at least we are dealing with one government, one system. The other issue related to this is OPEC dealt with this in the 70s when the United States decided to float the dollar in 1971. And then immediately OPEC lost because their oil was priced in dollar and their purchasing power just plummeted. So for 2 or 3 years, they've been trying to find a solution to this. And they brought in the top experts in the world. And they conducted several studies. And they looked at pricing it in gold. They looked at pricing it in the IMF SDR. They looked into pricing it in sterling, in a basket of currencies. And they looked at all the options. And the safest and the best option was to stick to the dollar. Why? Because each one of those has its own problems. For example, pricing oil in any single currency had the same problems of the dollar, regardless. The other issue is if you want to go with a basket of a currency, then you have a problem because OPEC members are on 3 continents and they are on the other side of the world. You have Indonesia on the other side in the Far East, and then you have countries like Ecuador on the other side and the Middle East in the middle. Their trading partners are different. And because their trading partners are different, the basket may not fit everyone. And therefore, they are not going to agree on it. And even if they agree on it for 1 month, it will change because of changes in inflation and changes in exchange rates. And that leads to very high cost of managing the basket. So it does not work. They looked at SDR, for example. They found out that the dollar is still a big part of it, and therefore they are still got stuck with the dollar anyway. The other issue related to this, and because people are saying we can price it in Bitcoin and this stuff, no, simply because the volatility is very high. When it comes to gold and Bitcoin, basically, we have to look at, when we look at liquidity, it's not the value of those in the market. It is what is traded in the market. Because if gold is locked up, then it doesn't count. If Bitcoin is locked up, then it doesn't count. This year alone, the value of oil trade is 1.6 trillion. Do we have enough gold that can be traded just like currency to cover that trade? Do we have enough Bitcoin? Forget about the volatility of Bitcoin. Do we have enough Bitcoin available to be traded just like the dollar? So the dollar is still king no matter what. Yes, it is losing ground, but still dominant. Here, I would like to point out for the listeners a very important concept, which is pricing oil in dollar is one thing, getting revenues in non-dollar is another. So if Russia right now is not pricing its gas in rubles, it's not pricing its oil in ruble. They are still priced in dollars. And in Europe, it's in euro. But what they are doing is they are getting the revenues in ruble. Iraq, historically, Saddam Hussein got revenues in euro. They did not price the oil. The same thing for Gaddafi, the same thing for Iran, the same thing for Venezuela. So pricing is one thing. The getting revenues is another. Getting revenues in non-dollar affect the market share of the dollar, but the dominance is there no matter what. There is one exception here I would like to explain before anyone gets mad at me, that yes, in Shanghai there is an exchange where oil is sold and priced in yuan. That's absolutely correct. But when you do the investigation and you do a study on this, you find out that the price in yuan in the Shanghai exchange is a mirror image of the exchange of Dubai of the dollar-based pricing of oil. It's just a mirror image. Once you adjust for quality, you adjust for the timing, you adjust for geographic location, it's exactly a mirror image. So it's still the dollar. Anyway, and the currencies of Saudi Arabia and the other Gulf countries except Kuwait are pegged to the dollar. Kuwait is back to a basket of currency, but still the dollar is a big part of it.
Interesting. Yeah. Your thoughts, Ira?
Well, I mean, that's as well as it can be laid out. And the dollar is right. It's been a problem. And I wonder why they don't, again, and Zoltan Pozar has talked about it quite a bit, pegging it to a basket of commodities. Will that come in time? Yes, of course, because if the United States acts irresponsibly, and I think Dr. Nas brings it up beautifully, because see, even when I was in university, and you're right, because of my gray hair, and I was there in '73, and the embargo, I thought back then, because I was studying economics, had more to do with the U.S. paying the OPEC nations with a weakening or deteriorating asset. And they said, well, we're not going to take this forever, because what I think back at right prior to the embargo, oil was probably $1.75 to $2 a barrel, maybe $2.25. But the dollar off of after Bretton Woods had been detached from any underlying asset except for the good faith and credibility of the U.S. government, that they said, no, this isn't gonna, you're not gonna keep giving us lousy depreciating asset for a good asset. I mean, so we're still stuck in that world. And if the United States, to me, acts irresponsibly, if policy is irresponsible, you'll start to see a move away from it. Now, I've always believed you don't have to have 100% gold to back. Believe me, the oil producing nations would be far if they demanded 20% of payment based on gold, they'd be far ahead anyway, and it would give them a little bit of an insurance policy and probably shake up the world. You know, I'm waiting for Russia to pull something off like that. I know we're early, and in today's uncertainty with what's going on with all the central banks and everybody trying to find their footing, but I think that as central bank credibility gets tested, all central banks, by the way, because I think they've gone down a road, as I've maintained, that gold's not a hedge against inflation. Gold's a hedge against central bank credibility. Because if it was a hedge against inflation, it would have rallied well before, which it didn't. And it would be far lower than it is now. Because as now the central banks are trying to reestablish their credibility, the world financial system and huge sellers of the most important asset, of the most important raw material in the world, which is, of course, energy, would be reacting differently. So right now we're trying to figure this out, and I think the central banks are now on a course where they're trying to reestablish their credibility. They have a long way to go, and I don't know what the break point is going to be for the global system, but I think the energy producers will provide some of the future view to this.
I think this is a personal opinion here. I think if the reputation of the central banks start deteriorating, that affect, of course, the financial system. But the financial system itself and the actors in the financial system are going to react to that to protect themselves through various methods, including hedging and other things. But I think we are going to see more movement toward, aside from hedging, toward profit sharing rather than actual loans. So the financial system might find solutions when it's on its own. And the reason why I'm saying this, because if you look at the histories of currencies and the currencies that were kind of dominating worldwide, you see that they are attached to the empires, if I am using the right terminology here.
Yeah, no, you are.
And as the empire basically is going toward its peak, its currency will dominate in the world. Then it reaches its peak. Once it starts declining, we start seeing losses. And then once Great Britain is Britain without the great, then they lost their currency lost dominance in the world. So with the dollar, what I think is, if the central bank does not behave very well, the financial system, the global financial system, is going to behave in various ways to protect itself. In a sense, this fits with what I do on a daily basis. Is I study the unintended consequences of regulations, and if the central banks do not do well, then the rest of the world is going to protect itself in various ways on the ground in a ways that no one expects. But that does not mean they are going to get rid of the dollar simply because we still have the empire. It will take a major decline of the power of the United States to see the dollar shrinking and losing its reserve status. Otherwise, it's going to stay there.
So the movement that we see, especially in the Mideast, right? I always go back. We saw Biden go to Saudi Arabia after many people around him spend their time bashing the Saudis, especially with MBS. I find it kind of ridiculous, but when you're fat and sassy, you can worry about things that, I don't know, to me, questionable. But one thing that always sticks out in my mind is in 2017, when the Saudi king went to Moscow. That was a game changer, because that's never been done. A Saudi monarch going to Moscow. So am I remiss in thinking that was a huge game?
Yes, let me explain this, because this is you are raising a very important point. If you look at if you want to call it the kind of new leadership in Saudi Arabia in the last 7-8 years, a new thinking, new vision, 2030, etc., etc., they really want to assert their identity and their position in the world. and they realized some of their strength that they did not have before. And to give you a couple of examples to show you why Russia is important to them and why Russia see support in them. At the time when Biden was bashing Saudi Arabia and the Democrats basically bashing Saudi Arabia, what we saw, Saudi Arabia basically is, as you know, there is a war in Yemen. There was a resolution in the UN Security Council against Saudi Arabia. And who stood with Saudi Arabia against the rest and vetoed that decision? It was Putin. So this OPEC plus coalition is not only about managing the edges or the fringes of the global oil supply. It's more than that. And then later on, we had the climate change resolution at the UN Security Council. That, if that resolution passes, it would have been a disaster for the oil-producing countries. In fact, it will be a disaster for places like Texas and every single major oil company. And who stood up and vetoed that? It was Putin. At the same time when President Biden was bad-mouthing the Saudis. So whom they are going to choose? So this way basically is very clear. But let me switch gear here, because I think people are missing the point about Biden's visit to Saudi Arabia and the other issues related to that. They had a meeting. He went in the middle of July, and the first day he met with the Saudi leadership. The second day he met with 7 Arab leaders. And strangely enough, when they started the official meeting of that summit, they started with one phrase from the Holy Quran. That's very strange. I mean, here you have a US president who is representing a Christian nation. I know some people do not like to label it that, especially if they are secular, but represent, in a sense, whether you like it or not, people are looking at it as a Christian nation. And they start with a phrase from the Holy Quran. And what was that phrase? The phrase literally start with, oh, we people, that's God speaking, or Allah speaking here. God and Allah are the same word here. Saying, oh, people, we created you from men and women. And they stopped there. So the message was clear. And then you listen to the speeches, president after president. They were telling Biden, you have your own culture, we have our own. You have your own culture, we have our own. And all of it was, please do not force the LGBTQ, whatever these things, on us. So, I mean, people thought it's about oil, about this, and all of a sudden it's about an issue that they wanted to change the education system and they want to change the laws in those countries. And those countries are rebelled. They rebelled against him and said, look, we cannot do that. We have our own religion, we have our own traditions, and you are forcing something on us. So in a sense, because we are in the energy field, we always talk about oil, but there were some other deep cultural divides there. Now you go to Putin, Putin believes in the same thing, what those countries believe in. And he is rejecting the forcing of what Biden wants to force on people. And we see the same cultural differences here in Texas and other conservative states. It's the same problem in every school, in every family. We have the same issues. So the connections between Saudi Arabia and Russia, or between the Gulf states and Russia, are many on several fronts. In this case, so it's politics, economics, social, etc., against the push by the Western leaders in exactly the opposite direction.
I think that's great. That's great insight. I mean, when people get all bent out of shape about the murder of Khashoggi, I say to them, dude, Saudi Arabia is a monarchy. Here's what I know about a monarchy. The king is the law. You may not like what it says, but that's what a monarchy is defined by. The king is, it's not the law is above the king. The king is the law. And if the king says, as far as I know, in any monarchy, autocratic rule like that, what the ruler says, that's it. So I find it really interesting that they started with that. because I'm sure that's, if the king says you're dead, you're dead. Just like if the king says I'm dead. If I have a fallout with a monarchy, I'm in trouble. I can either run away and avoid it, or I will suffer the consequences. So I think your point is really a beautiful point, is that we all want to look through the world through the prism of our glasses, and yet the world doesn't want to. That's an absolutely imperial nature. And I think America at times gets very imperial in more than just economic functions. So I found that.
Well, since we are talking about energy today, and at the same time talking about that meeting with Biden and what went on in this summit, let me add one more point, because I think the audience will enjoy listening to this. The other point, the speeches basically were focused on these cultural issues, but for MBS, the Crown Prince of Saudi Arabia, he mentioned something else in the second half of the speech, which is very important to the energy markets, because he said that we are going to increase our capacity, our total oil capacity, to 13 million barrels a day, and we are going to stop there, and that's it. And many people got kind of confused by the statement, and others said, you see, Saudis cannot increase production, that's it. Well, the context of the speech is extremely important here. First of all, the Saudis still have spare capacity. They are producing 11 million barrels a day. Their capacity is 12 million. So they can still add production no matter what today. They are planning to increase capacity from 12 million to 13 million by 2027. So the difference is 1 million. But people have to notice that the difference is really not 1 million. It's way larger than that. And the reason why, because of the decline rates. We have decline in the fields. So to reach 13 by 2027, that means they have to add 1 million, and they have to compensate for all the decline throughout those years. So that's really a major undertaking. We are talking about hundreds of billions of dollars to reach that level. So the context here was like this. First of all, Biden and MBS did not talk about oil, period. Oil was not brought up.
Really?
No, nothing. During Biden visit, my guess, this is my guess, is the advisor sold this issue before the visit because the Saudis do not want to talk about it. So they sold this issue before the visit, and therefore oil did not come up. It came up in the final public statements, but during conversations never came up. So what happened is the Crown Prince basically talked like this. He said, look, we believe in climate change, which is extremely important for a major producing country to believe in climate change. And we are going to work together globally to reduce the impact of climate change. But here is the problem. You guys, the policies you adopted is wrong. And just look at Europe and what's going on in Europe. And we believe that we need to use all energy sources, including, of course, renewables and hydrogen and everything else. But we need all of them. What you are doing wrong is you are choosing the resources you like and you are ignoring the others, and that does not work. We need all of them. The problem is we need more investment in the resources you don't like. And we are doing our own job by investing in those resources you don't like. So we are going to increase our capacity to 13 million barrels a day, but we are going to stop there. And if there is energy crisis, do not blame me. Blame yourself because I invested, you did not. So the context is important to explain why he said that.
Okay, so let's have some more comment. Why? Because he pushes that route, so he wants to ensure, that they're not to blame, which I find, very, very important. Because yes, the U.S. and others in their rush towards a green solution have made a huge mistake, because you're not going to turn a switch on and get to where you want to be. So there's a transition, and it may be a 30-year transition.
I think I mean, this is the problem we have. If you look at energy, first of all, the history of humanity is the history of energy transition.
Good.
So we are talking about tens of thousands of years. An energy transition does not happen in a lifetime. It happens in multiple lifetimes. And what those guys want to do is they want to condense 400 or 500 years in 50 years. It does not work that way. And there are many problems that will result out of this. But part of the problem is what we see in Europe. Remember that the crisis, the energy crisis in Europe started before the Russian invasion of Ukraine. And most of the problems we see today have nothing to do with Ukraine. But the issue here is this. Yes, we do need all energy sources, period. We need all technologies. We need energy conservation. We need diversity of transportation technology. So we need electric vehicles. But my problem is not with solar or wind. My problem is not with electric vehicles. I believe in all of those, and we need all of those. My problem is with the hype. My problem is when you go and spend trillions of dollars to change the whole transportation system in Europe to electric, only to reduce, and listen to this number or percentage, only to reduce global CO2 emissions by only 2%. Only 2%. If we switch all the transportation, or not, sorry, if we switch all the cars, not the transportation, all the cars in Europe to electric, that reduces global CO2 emissions by only 2%. If we change the whole transportation system in the United States, every plane, every ship, every boat, every car, every truck, everything, if we switch everything to electric, that reduces the global emissions by only 4.7%, which means that between Europe and the United States, after spending trillions of dollars, the reduction is less than 10%. That's where we start talking and say, look, hold on, there is something wrong here. There is definitely something wrong here because the cost, I mean, look, we have kind of a little pinch in terms of inflation and crisis just in recent months, and everyone is yelling and screaming.
No. Yeah.
Okay. So imagine, so in a sense, yes, we do need solar and wind. We need electric vehicles, but this hype just does not make sense. And let's be practical about this energy transition. This energy transition needs hundreds of years, and we got to plan it that way. We have to balance energy security with environmental security. That's the only way we can move forward. Otherwise, what we've seen in Europe right now is the living standards of Europeans is going down. When you ask someone not to take a hot shower after all those years, when they have the best living standards in the world, and all of a sudden it's going down and down and down and down. This is really a serious problem.
If I can, Rich, I want to, because the doctor is so good, and it's, again, our audience is a political economy oriented audience. But one of the things that has bothered me, and I write a blog and I've written it for 13 years, one of the issues I've had for a long time is the role of Gerhard Schroeder in all this. Because Gerhard Schroeder turned Germany into a dependency of Russia. And not only did he do it as chancellor, he laid all the groundwork. People don't, because he was already back in the early 01, 02, 03, they were already had drawn up plans to turn off the German nuclear energy sources. That was already there because he understood the role of the green voters but then, people forget that in 2005, he calls an election he didn't have to call, knowing he was going to lose it because they were still suffering some of the hardships, especially the unions who had to deal with the Hartz IV, and then takes a job immediately at Gazprom. So it's where the burden really lies, because he created a situation where he dug them in deeper and deeper. And of course, Merkel makes every mistake, and Fukushima gave her cover in 2011, 2012 to finish off that. So it led them down this path.
Yeah, let's look at the politics of Germany, because you touched on a very important point here. The fact is, we have a movement in Germany since the late 60s against nuclear. And there were demonstrations after demonstration after demonstration against nuclear until the liberals came in and they decided literally to end nuclear. The conservatives came in and said, no, we are not going to end the nuclear. And then in 2009, Angela Merkel basically won and decided to reverse all the orders and all the laws that governed nuclear, because based on the old laws, they were supposed to be phased out, I think, and they're supposed to end by 2032, if my memory serves me right. Then she came in and they had 18 reactors, extended their lives, etc., and they start working on nuclear. And then we have Fukushima in 2011, and immediately 2-3 days after Fukushima, she changed her opinion completely to the other side and decided to phase out nuclear plants. She shortened the time for 10 and killed 8. But if you go back, and this will emphasize your point, if you go back and look at the landscape in those days after Fukushima, the difference between Fukushima and the elections was like 14 days. And they were losing ground. The conservatives were losing ground. And the only way they can regain some ground is to do what they did with nuclear. So it has nothing to do with Fukushima. It has to do with domestic politics. For a politician to switch from the far right to the far left, okay, it does not happen just like this because of Fukushima. Something happened on the other side of the world. You never experience a serious nuclear problem in your country, and you have the best engineering and the best engineering schools and the best engineers in the world. So why you switch? Well, it was because they were losing ground in some of the states in Germany, and that's why they did. And they decided to phase them out. And once they decided to phase them out, then there is no incentive for the companies to invest. There is no incentive even to invest in maintenance. So by the time they closed some in 2021 and others to 2011 and others in 2017, but now they want to go to 2022. They have 3 plants left, and they're supposed to be closed by the end of December. And then the crisis happened, and now they want to extend their lives, but they ended up with a problem. The company's been planning for 3 years to kill those plants. And there is no way you can reverse the efforts of 3 years in a couple of months. The only way you can do it is you need additional investment with a credit from the government, and then you have to stop. Literally, you have to stop those plants for several months until you start a new cycle that will take you until 2025 or 26. And they cannot afford to lose any at this time. So the only choice basically left is just to close them, no matter what. Because if they want to extend them, they have to stop right now to put the fuel and do the maintenance that the companies were not doing because they are fixing to close them. Why spend on maintenance if you are going to close them? So they got stuck, and they got stuck in a way where the only choice left is just to close them.
Clarifies that.
Interesting. And just a final question on investing in energy. What are your thoughts on the best ways to invest in energy? Is it equities, commodities, or other investment vehicles? And also taking into account like risks from resource nationalism and regulation risks you mentioned you specialize in as well.
Let me start with the last point, because this kind of a really important issue. I mean, we talk about nationalism. It's not only resource nationalism on the producer point of view. Look what happened in Germany now when they nationalized their main power company. So Germany basically is nationalizing its own company, and it's a consumer. So it's nationalism even within the EU. And the harder the crisis in Europe, the more nationalism we are going to see within the EU. So nationalism is really on both sides, on the producer side and the consumer side. When government decide to hoard oil or to hoard natural gas or hoard power and not to share it with the other countries in the EU, that's nationalism too. To go back to the investment question, right now, because of what Ira and I talked about earlier, things are going in all direction, and it's very hard to find the net and very hard to find a direction. So right now, it is very clear that we don't know where we are going. Well, do we have a recession or not? Will Russia cut gas exports or not? Well, impose that price cap, what the impact of the price cap, all these things together, we don't know. What the Fed will do and the impact of higher interest rates, etc. So this period basically is very hard to make any major decision on it. But after we pass this period, I think that the war in Ukraine is going to move from high intensity conflict to a low intensity conflict. And that's going to be reflected worldwide. And I think that Russia and Taiwan thing, it just is not going to happen. I think this is a big hype, but people should know if, and I say this is a big, massive if we have an invasion of Taiwan and the United States is involved, this is very bearish for energy, very bearish. And I don't think even OPEC can manage, or OPEC Plus can manage the market at that time, because the loss is going to be larger than COVID. The loss in demand is going to be larger than COVID. So this is very bearish. But this is, again, a big F here. But looking at the midterm and the long term, we are heading for a major energy crisis, not only because of lack of investment in 2015 and the years that followed, and the decline in investment, especially in the oil and gas sector. This is already well known to everyone. The issue that is not known to everyone is the failure of some of the green policies. And the failure of some of those green policies in Europe and the United States, by default, and I emphasize this point, by default, is going to lead to increase in the demand for oil, gas, and coal. We are already short on investment. Now we have additional demand, and no one is counting for that additional demand. The IEA is not counting for it. OPEC is not counting for it. Major banks are not counting for it. The oil majors are not counting for it. How we are going to fill this gap? That's going to lead to a major increase in oil prices. So investors can benefit from that. However, don't count on $500 oil in this case, etc., because we are going to see major destruction to demand. We are going to see major decline in demand. So we are not going to see these excessive prices, but at least investors can benefit from this period, which might last from like 2 years to 5 years until we solve our problems in one way or the other.
Interesting. And your thoughts, Ira?
No, I mean, this is, and I'll tell you, I love these points, and yeah, I'm highly skeptical that we're going to see anything in Taiwan. I think that was resolved, well, we're both old enough, 50 years ago, that the United States would never risk thermonuclear war to save Taiwan. I think the Taiwanese understood it, and it was the whole basis to me of strategic ambiguity, that the Taiwanese would never feel safe enough that the United States would come behind them. And you saw how fast the White House again walked back Biden's comment. I mean, this is the third or fourth time that they've had to walk that back. But it creates all kinds of situations. And now, and so we're there, and we're talking about, we haven't talked about it, but this will probably be, hopefully we'll do another podcast, but the whole ESG investing. And you have ESG investing. And I've looked at it, yeah, and everybody wants to feel good about themselves. But the lack of, and everything that Dr. Anas is talking about is, well, if there's no investment going in, you are going to keep getting caught off short, and it's going to be worse. And then, as we're seeing it now, the world is burning more coal now. So if you end globalization and everybody just is left fending for themselves, and if I'm the Chinese or I'm the Indians, and I go, well, I'm getting a lot more bang for my buck of buying coal and burning coal, and it enriches my citizenry, I'm burning coal, because none of your global agreements are worth the paper that they're written on, and I'm going to do what's good for myself. And globalization only works when you all kind of view, we're all in it together, whether it's trade, finance, well, we're all benefiting together. And of course, climate change, because how are you going to enforce it? What are you going to go to war to enforce that the Chinese are not going to burn coal? No chance in the world. Or that the Indians won't burn coal. Everybody will burn what is in their best interest. As Doomberg, who, I don't always agree with Doomberg, but they're thoughtful and they write things. I don't know, Doctor, if you're familiar with them.
I know Doomberg.
Okay. So, they're talking about burning wood chips, that they're importing all these wood chips from the United States in England to burn for heat. So you do what you need to be done. And we have a tendency in today's world, especially in social media, to produce platitudes that we aspire to, but we can't get to. And in fact, the aspiration of the platitudes makes everything worse, just like we've changed. And Dr. Nass has laid it out beautifully. We've made very bad decisions that have left us in a very precarious situation. And you see it. You see it in Europe now. People
let's have a whole show on ESG, because when I tell you the results of my research, everyone will be shocked, because I was shocked myself when I looked at the results. I mean, you will be laughing and crying at the same time.
I'm with you. I absolutely, I look forward to it because, again, we're about investment opportunities, and that's what ESG is. I mean, you can greenwash, you can do whatever you want, but it's everybody. Well, if I go this route, number one, I'll attract a lot of investable capital. I don't have to look farther than BlackRock, who has built up a mega amount of investable capital by out-greening everybody else. But that all falls to the wayside if in fact globalization, because at the same time Larry Fink is talking about the end of globalization. Well, you can't, if you're talking about the end of globalization, you can take your ESG and stick it somewhere because it's worthless.
Well, let's talk about it in the next show, because whenever you guys have time, because
I look forward to it. Yeah,
you are going to hear some stories that are just amazing.
I look forward to it. This was, okay. I really appreciate, because you're in my realm, where I like to believe I reside in the political economy, and you are really good at it. So thank you. This has been really
You're welcome.
wonderful.
You're welcome.
Yes, thank you so much. And how can our listeners learn more about your work, Dr. Alhajji?
Well, there are two places. As you know, I am in the speaking circles for those who are looking for keynote speakers for their events. That's what I do. I travel around the world and give speeches regarding various energy market issues, intelligence, some information that they don't know about, and some analysis that are unmatched in a sense. So they can go to my website, which is my first name, my last name.com, ANASALHAJJI.com, and the form to book me basically is there. And then my Twitter account, which is again my first name, my last name, at ANASALHAJJI. I put a lot of information. And the final comment here is I do tweet a lot of things in Arabic, and there is some valuable information and breaking news that do not exist anywhere else. So please take advantage of the translate button in Twitter. And it is always below the tweet on the left. So just if you click on it, it will translate the tweet to whatever the language your browser in, and you can read it. So don't mute me or unfollow me because you see the Arabic tweets. Take advantage of them.
Okay, and great. And Ira?
Well, I'm still at Notes from Underground, and of course doing a lot of these podcasts. And I'll tell you what, it's kind of interesting because my daughter-in-law is at the Atlanta Council on Energy. And you go, why? How did she get there? Because she's fluent in Arabic. So it's originally how she, and then Energy just became the place where she settled. I don't know if you've done anything with the Atlanta Council. I do go on their podcasts at times.
I did not, but I would happy to kind of help out if they ask me to speak or.
All right, I will let her know. But no, this was really great. But I still I wrote a blog, Notes from Underground. Hopefully, I'll get one out covering a lot of currency and bond markets, but you can't cover those and not cover the world's global commodity markets, especially especially the significant commodity markets, oil, grains. So no, this has been great, and I really appreciate. I'm glad I've come into contact with you, and I hope
you're welcome. You guys have my email. If you'd like to contact me personally, you are welcome to.
Great, I appreciate it. I look forward to it.
All right.
Yeah.
Thank you.
Thanks for the next
All right.
time.
Thanks, Richard.
Yeah. Take care.
Okay.
Thank you.
All right.
Yeah.
Thank you very much.
Bye.
Bye.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.